Hello, and thanks for the time. Thanks for taking the time, rather, to listen in. This webinar will give you more information about, really what's going on in the U.S. real estate market. It's going to be about 30 minutes in length, and we can't cover everything, but we're going to try to give you an overall idea what's going on in the U.S. market, and where are some of the best kept secrets. And we're fortunate enough today to have the experts. From Alberta and York, we have Daryl Hemingway and Michelle Tavares. Welcome to the call, guys. Thanks for being on the call.
Thank you.
Hi, Simon. Thanks.
Now, for those that are listening in and watching in, I'm going to be controlling the PowerPoint slides, so I'll kind of be your guide as we go through this. And where I need the expertise of Daryl and Michelle, these fine people will be piping in. And just so you know, Michelle and Daryl are with a company called Albert and York. And Albert and York is based both in Toronto and in Scottsdale. And this is essentially our webinar agenda. We're going to be talking about the state of the U.S. market. We're going to be talking about, one of the best places to invest. Obviously, there are multiple places to invest in the U.S., but we're going to share with you where many of the top investors have zeroed in on, where they're investing today, and where they see a huge upside potential and why. We're also going to share with you how to avoid the most common mistakes that we've seen people make. And with the advent of something called the internet and of Google, people think they can just Google real estate and buy almost anything because it's half price. It's a good deal. Well, cheap is not necessarily the best reason to buy something. It's one of the factors, but there's other things that we need to analyze. And at the end of the day, because we're buying in a location that's so far away from us, we really need to understand how to secure a hassle-free investment. And there are ways to get it, at below market. So this is what we're going to talk about, and we're just going to go into it right away. So here's what most people already know. Most people know that the U.S. real estate market is on sale. The cost of entry is lower than before. We've all heard the numbers. It's selling for 50 or 60% below the original market peak. And we always compare to what we call replacement value. So if a builder was going to build a home, build a condo, what would be the cost, the hard cost, labor, material, and all that stuff, and how does that relate? And we're still seeing prices that are well below replacement value. And a big factor for Canadians as well is that, money's now at par. It fluctuates 5 cents up or down, but money's at par. And I can remember when, we used to go down south and, my Canadian dollar was really only 60 cents in the U.S. It really didn't go as far. Now, if you're like me, you got to believe that the U.S. dollar is going to rebound, and everybody buying at today's prices is going to get an upside just from the change in currency, but that's one of the driving forces. Warren Buffett, most of us know who this brilliant man is, very wealthy man. His quote, if I had a way of buying a couple of 100,000 single-family homes and I had a way of managing, and I think this is where you guys come in, Daryl, managing is probably the single biggest challenge people have. And if I understand correctly, you guys have figured out really what the secret is to managing income properties in that market, correct?
That's right. We've been investing there for 3 years now and managing our properties the whole time, and we've learned quite a bit about how to successfully generate great returns from those properties.
And of course, the other commentary about mortgages being at such very, very low rates, and we'll talk a little bit about that in a second. And obviously, people are going south. They're going south to retire because it is warmer, quite simply. And the Boomernomics statistics say 34 million are going south to retire and to vacation. And of course, that's going to be pushing up demand and prices. Now, we're getting all kinds of stats in the media now that the U.S. real estate market is going to be rebounding. And this is one of the indicators that the household debt is shrinking back down to the trend line. It's almost there. And in many of the key markets, and we're going to be talking about one of them, we're actually starting to see prices come up, which is, we really didn't know how long it was going to take. It's been almost 4 years now since, the credit crunch in 2008. It's probably about what most people predicted, but all things point to the U.S. market normalizing. But again, where in the U.S. market do you want to invest? And you got to understand, and this is where Daryl, I want you to pipe in now. The U.S. market is definitely not like Canada's. Certainly there's different market areas in Canada, but what I mean is the difference when we talk about foreclosures, when we talk about short sales and REO sales, as well as some of the traditional sales. So do you want to just speak to that quickly?
Absolutely. You're absolutely right that there's a lot of differences between Canada and the U.S. I've been buying property in both countries for many years, and it took a while to learn the different laws and the different ways in which foreclosures and bank-owned properties are sold. And when the foreclosure crisis hit, everything went crazy with the number of foreclosure properties on the market. And we really had to understand the details of how each transaction works in order to get the very best buy prices. Most of the properties in the U.S. right now are being sold like an auction, whether the bank is selling it or it's being sold actually on the courthouse steps. And understanding that is so critical, making sure that you buy a great property at a great price and don't get ripped off.
Well, we're seeing multiple offers in a lot of these situations as well, and I think what I've seen as a mistake, not just in the U.S. market, but even in Canada, people think that just because it's a bank sale, almost at any price, well, it must be a fantastic deal, and that's not always the case. In fact, in some cases they're overpriced, but in other cases they're underpriced, and that's evidenced by the fact that we're seeing multiple offers, which I think surprises a lot of people, doesn't it?
It does, absolutely. But it is a very competitive market, and it's been going on now for over 3 years, and the banks aren't stupid. They've learned how to price these properties to try and get the maximum dollar, and we try and take advantage of situations where they're desperate to sell and are willing to give it to us for 20 or 30% below current market value. Mm-hmm. And that's so important because we make our money when we buy, and as you mentioned, by managing them well.
Mm-hmm. Now, when we talk to people, this is probably one of the questions, maybe not that they don't even really ask the question so much as they're wondering the question, and I have to almost pull it out of them because, one of the most common things we get as well, for example, is, I like being down south somewhere warm. Can I buy something as an investment and then retire in it later? And, what would you comment about that, Michelle?
I say that's one of the worst things you can possibly do. I hear that so often, Simon, and it's really a trap for people who are trying to buy either or vacation and investment property. I don't know about you, Simon, but I will never live in any of the properties that I rent out.
Absolutely. Yeah. I mean, the analogy that I like to make is, just because you like driving a Volvo or a BMW doesn't mean that's what you would buy for a taxi. So we invest in something that makes the most sense from a cash flow and from an upside potential, and then when we're ready to retire, we use the money that we've made on our investments to buy whatever house we like. Because it's going to be, it could likely be in a different neighborhood, it could be a different type of home, it could be in a different state, all that, So we invest our money where it makes the most sense. And, one of the things, I think that are probably the most desirable to Canadian investors especially is, how do I find turnkey tenanted properties? And this is exactly where we come in. Correct, Daryl?
That's right. We've been buying these properties for many years, and we've had many of them rented out during that time. Some investors that we've worked with have wanted to actively manage the properties themselves, but we do the buying and the repairs, which really can only be done in the U.S., and it's very difficult to do from Canada. So we help them out, get them rent-ready or tenanted properties so that they can manage it easily from their home in Canada.
Mm-hmm. So, whether we want to look at a vacation property or a retirement property, or we want to look at a cash flow tenanted property, or we're interested in a joint venture situation, I guess the message I want to get out to our listeners is that whatever that type of purchase they're looking for, we can help them figure that out, correct?
Yes.
And I just want to explain a little bit about the joint venture. Joint venture simply means you're partnering with the investor in a sense that your company has a stake in the investment. They're managing it. You're managing it on the ground, and you get a small percentage at the end of the day as being basically an on-the-ground partner with the investor up here in Canada, correct?
That's right.
That's correct. The joint ventures are really businesses. We're in the business of buying and renting out properties, and we're the managing partner on the ground in the United States, and our Canadian investors are the passive investment partner, and they receive the benefits from real estate without any of the hassles, tenants, toilet, trash, and termites, for example.
Yeah, and I guess the question that I would have as an investor is, I probably have a lot of questions about how do they all work, and of course we can't go into a lot of detail on the webinar, but essentially what I'm hearing is that whatever it is, whether you want to buy a vacation property or you want to buy a tenanted property on your own, or with an on-the-ground managing partner. We have all of those options, and I guess the way to find out more is to request more information at the end of this webinar. But let's continue with our discussion, about what's going on. And I guess, the big question is, where should I buy? And if you're buying a vacation property, the answer to that one, no one can answer but you. But if you're looking for an investment property, there are certainly certain locations, and on this webinar, we're going to talk about one specific location, and again, one that may or may not be the best one in the world, but one that probably I'd say most of the investors that have started to analyze the U.S. market have really begun to focus in on, and that, of course, is Phoenix. Because when we look at, this is one of the first of many charts we're going to share with you. When we look at U.S. job growth in the U.S., if you look at the Phoenix area, which is right down here, you're going to see that it's the job growth that's going to be driving things, because population, when we analyze the Toronto market, the big variable that really answers everybody's questions is what's going on with the population in the GTA. How do we have such phenomenal growth in the GTA market? The answer, of course, is population. And the same thing when we look at how do we decide on a place like Phoenix or the Arizona market? Well, it's job growth that's driving us. And of course, everybody pictures the desert, but Phoenix is a gorgeous oasis. Michelle, I know you're crazy about Phoenix. Why don't you share with our listeners and everybody on the webinar, what it's like down in Phoenix if you've never been down there?
Well, having been from Toronto and born and raised my whole life, I never really imagined what Phoenix would be like. And I speak to a lot of investors in Toronto and Ontario and surrounding areas that really have the same feeling that I had. They didn't know what to expect. And the reality is Phoenix is a large city. It's the fifth largest in the U.S., growing exponentially. A lot of things to do for those who want to get out and have some entertainment. There's golf, there's shopping, there's great entertainment and great places to eat. The scenery is absolutely gorgeous. The spas are phenomenal. They're well known for their resorts, and it's a hop, skip, and a jump to other local places like Sedona, the Grand Canyon, Vegas, L.A.
Yeah, it is close to Vegas.
It's pretty close to everything. Yeah. In a couple of hours, you're on the beach in Mexico. It's just such a wonderful place to work, to live, for everything. And one of the things I love about it the most in terms of looking at it as an investment, because of course the most important thing for me when I'm buying property is it a good investment, is really, can I buy property here that is safe and secure, and who am I renting to? So it's so important to understand, who are your demographic tenants? What kind of tenants are you renting to? Is it families or is it vacation dwellers? These are some of the most important factors you want to take into consideration when you're buying rental property. And Phoenix really came on top over and over again, no matter which fundamental we were looking into, but especially the kind of people that we're renting to. You want to rent to families, and this is a great family kind of place.
Well, I think you just took the words out of my mouth, and you segued perfectly into my next points, and that is, the real estate fundamentals. And obviously, the abundance of foreclosure properties and the bank inventory, gives us the opportunity. We've got population growth, which gives demand, because really, without an upside, I don't care how cheap it is. If I buy for $1 and it's $1.01 10 years from now, that's not a great investment. So we've got a growing demand and population growth. We've got a strong employment market, diverse economy, short supply. We have very low vacancy rate, and on top of it being a great place to live and work, it's also a place where people want to vacation, they want to have fun. But let's talk numbers, because this is, I think, we look at these kinds of numbers. 2005, this type of newer home, close to $300,000. Today, it's $100,000 to $130,000. This is what's driving people to the southern United States, correct?
Absolutely. The value in Phoenix and surrounding areas is tremendous. It's a very low cost of living place to work and to live and to retire, but it offers tremendous opportunities, being the size of Toronto, for example, and offering all of the features that a large metropolitan city has. Mm-hmm. We were actually very surprised at how large Phoenix really is when we first went down there to invest. Yeah,
I've got a ton of info here. Here's some job growth stats. Number one metropolitan area I would assume in the U.S. for job growth. And when you look at Metro Phoenix, it's a pretty big city. A lot. I mean, until I was down there, I just pictured a small little place with a lot of cactuses, and it's much bigger than that. There's still a lot of cacti, and I learned the word for plural cactus, by the way. It's cacti.
Yes.
Fifth largest city in the U.S. So very similar to Toronto in that, similar in size and similar in scope. Home to Fortune 500 companies, all of that stuff. I know, Michelle, you like checking out all the different sports franchises when you get down there. So do I. What's it cost now for a NHL ticket?
About $25.
A little cheaper than the Air Canada Center. So a lot of fun down there. So even when you're just going down there to check things out, we can actually have a lot of fun and have a little working vacation. Of course, there's one or two golf courses in Arizona if you like that kind of thing, and the resorts are phenomenal. I mean, last time I was there, I stayed at the Princess in Scottsdale. It's absolutely spectacular. They actually had an outdoor movie playing while we were laying in the pool at sunset. It was just spectacular. But now let's get back to what we're talking about. Here are some real life examples of actual properties that are available for sale in the market. And if you want to just, Daryl or Michelle, if you just want to pipe in, and we'll go through these examples fairly quickly. So this is an example of type of home available under 100,000. Is that correct?
That's right.
That's right, and this is a tenanted property, and it puts over $600 of positive cash flow after all expenses into your pocket every month.
So after property taxes are covered, the property management fees, and it's already tenanted, correct?
Absolutely. One of the great things about Phoenix is that the tenants are paying all their own utilities, so there's minimal expenses. Property taxes are low, and you can see the results. It generates a tremendous cash flow for the owner.
And you know what? I got to make a point, too. I had a look at the Arizona rent control guidelines. It is completely different than Toronto. In Toronto, in Ontario, really, it's very lopsided in favor of the tenant. In Arizona, and you can attest to this, if a tenant doesn't pay rent, you can have them out in 5 days. And I think that's one of the scariest things for people that are investing in income properties up here. But obviously, in my opinion, much fairer rent guidelines in Arizona State. Here's another example. Property under 100. We'll just kind of rifle through these guys. Positive cash flow after expenses, $470 a month, $501 a month, under 100. Here's one with a pool. And now we get into some of the newer properties. And again, we're seeing, although the prices are slightly higher, 120 to 180. Now we're seeing cash flow 638, cash flow 583. But now we're getting into larger properties with, I would assume, much bigger upside potential. Correct?
Absolutely. Again, as you mentioned earlier, most of these properties are being priced today at about half of their replacement value. And being foreclosure properties, we're able to get a lot of freebies from the bank, including the pools you see here, often granite or Corian countertops, stainless steel appliances. All of those are really being thrown in with the house at bargain prices.
Yeah, and really what kind of strikes me, these are gorgeous looking houses. What strikes me is, this is not what we picture in terms of a rental property. I mean, if we were to look at, the least expensive house in the GTA market, we'd probably be looking at places like Oshawa. We'd be looking at 250 to 300, and they don't look anything like these places, correct?
Absolutely.
That's right.
And these more expensive homes you're looking at, it is a different kind of investment. These are the types of homes you're going to hold for the appreciation of them, because obviously, a 2,400 square foot house like this, 5 bedrooms, 3 baths with a pool in the backyard, it's a gorgeous house. We know these are going to come back quicker, and they'll go for well over $200,000. You can't build it for $200,000.
Yeah, I think we're all in agreement that they really have to come back to, at least replacement cost, and over time replacement cost is just going to get even higher. And
That's right.
Here's what I know about Americans. They love their white picket fence. They're not going to be renters forever. So, we have these situations, folks, where you've got somebody that's living in a house, and I think back, 2008, you're living in a house worth $500,000, and the bank tells you, well, now it's worth about $250,000. What do? Well, you walk away. And that's what a lot of people did. They just walked away and they're renting. And now they've got 3 years to clean up their credit. When they clean up their credit, trust me, they'll scramble together the 5% down, the 10% down that they're going to need in this market to buy whenever that comes back, and whenever their credit comes back, and they're going to be buying these homes back, and they're buying them at 50 cents on the dollar, even with twice the price that we're paying for them now. Now, there's other options. We've shown you, basic single-family homes. There's other options, of course, if you're looking for a vacation condo. There are opportunities for personal use vacation condos, or if you want a home on the golf course. There really is, you can really choose whatever you like. I think it really just comes down to understanding, why are you buying first? Is it primary, like is it a principal use for yourself, or is it more of an investment? You got to figure all that stuff out. And if I could guess, these are the top 3 questions that we're getting. I'm assuming you're getting the same questions. Number one is, how should I buy it? Should I buy it personally? Should I buy it in a corporation? Should I buy it in an LLP? Daryl, you want to pipe in on this?
Absolutely. The method of buying or the ownership of the property is going to involve a couple of considerations. Number one is protecting yourself. You want to make sure that you are safe and secure with your ownership, whether it's a vacation property or an investment, and having the right structure to ensure that safety is so important. And that's where our experts in the legal department, the lawyers we use, are so helpful in being able to provide Canadians with the expertise that you need to be protected.
So we're getting into the area of discussing tax, and that's kind of probably the second question. How do I minimize my taxes, avoid paying double tax? So as Canadians, as I understand it, you don't actually pay double tax, but whatever tax you pay in Arizona for your property on cash flow and on capital gains, you basically get a foreign tax credit, which you then take into consideration on your Canadian tax return, correct?
That's correct, if it's done properly. Now, I must say, Simon, this is the area of the most mistakes we see, and the biggest mistakes by Canadians buying property in the United States today. They get the wrong information, perhaps from a Canadian or U.S. accountant that isn't used to dealing with the cross-border situation, and instead of minimizing the tax and getting that foreign tax credit, they're sometimes winding up paying as much as 60% tax on their property, which we want to avoid at all costs. So getting the right advice from someone who is a cross-border expert, like the folks that we use, is so important to make sure that what looks like a good buy today doesn't turn into a nightmare later.
Yeah, and you bring up a really good point. People have to understand that, with all these considerations, we're talking about, legal ownership, what form of entity do you use, what about taxation, and, about financing. When we get involved in all of these different points and considerations, there's no one person or company that can really address all of these things. Even with our working together with Royal LePage right here in Canada, with Albert in York, in Toronto and Phoenix, we still have to involve the right tax people, the right closing company, and termite inspectors, and on and on and on. So it really is about building and creating a power team. And I think that's probably the biggest advantage that we bring to the table, is that we've put together that power team of people right here in Toronto, as well as all the people on the ground that we're going to need, from the attorney to the cross-border tax advisor to the people finding and evaluating the properties, managing them on the ground, everything from A to Z, correct?
That's exactly right. We've done it before. We're investors. We've bought property in the U.S. We own property there today. We're renting it out, and we're dealing with the legal and taxes on a daily basis. Mm-hmm. And our investors tell us that they sleep easy knowing that there is an experienced, trusted team in place helping them every step along the way. Mm-hmm.
Now, when we have a due diligence checklist for every client that we work with, and there's so many other questions to ask. We sort of touched on a couple of them. Is this for personal use or purely investment, tax issues, management, and so on. We go through all of these different things. We need to understand, what financing is available for Canadians, especially as investors. Of course, down payment vary from each situation, every buyer. Interest rates are a little higher than Canada, but still very very good rates in the U.S., but we know which Arizona lenders. Now, Canadians need to understand it's not like Canada. In Canada, we have the 5 major banks. We have another 20 lenders. There are hundreds and thousands of lenders in the U.S., and it varies from region to region, state to state. So you really need to know which lenders are ready, willing, and able to help. And there's also opportunities to use your RSP. And Daryl, I know you're the expert, and if I asked you, you could probably speak for about an hour on this. But very quickly, Canadians can use their RSP self-directed. There's a couple different vehicles, but can you touch upon that for about 30, 60 seconds?
Absolutely. One of the areas that people have asked us about over and over again is, can I use my RSPs? They have money sitting there that they want to put to work on a great, safe and secure and high return investment like real estate. And we're very happy that by working with the right experts, we've been able to do that, to enable Canadians to use their RSPs to buy Arizona property. They can do that by self-directing their RSP money. And we're happy to explain that in more detail in a one-on-one basis because everyone's situation is different.
Yeah, so in a nutshell, the money doesn't actually even leave your RSP, but you sort of leverage it, and you can use this for an investment, like a pure investment or a second home, correct?
That's correct. Any piece of real estate can be used.
And again, if you're looking for specific answers to questions around the RSP area, then you'll want to connect with us, and we'll set up a dialogue with Daryl and Michelle at Alberta, New York, and they'll walk you through that if that's one of the areas. And this is what we're excited about. We've scheduled our next Phoenix tour, which is May 17th to the 20th, 2012. I believe, Michelle, that's a Thursday to Sunday, correct?
That's right.
Yeah, so a little bit of work, a little bit of play, because we want time to enjoy ourselves. It's not going to be all work, but Michelle, if you could just kind of walk us through, what's going to happen on the agenda.
Sure. Thanks, Simon. Well, we're going to have a information-packed weekend as well as a fun-packed weekend, like you said. We will definitely go over all the details about the market, what's happening, what's to come, what has happened, so people really gather a really great understanding about what is happening with the Phoenix market. We're going to be driving the neighborhoods, having people walk through some of the properties, get a really good feel for the different types of investments we have been buying and our investors have been buying. They'll get to see an auction, a real live auction on the courthouse steps, which is completely different from anything we've ever seen in Canada. So that is really exciting. We're going to be telling you exactly what you need to be ready to buy, meet with the whole team, the legal, the tax department, financing groups, the rest of our team members who are situated in Phoenix. And this is a great point that you brought up here. What type of investor are you? By the end of that tour, you'll be able to really understand what is the difference between being an active investor and a passive investor, as well as to understand what the difference is between being a vacation investor and a rental investor, which you and I, Simon, talk about in detail quite often. And of course, we'll go through a rent-ready type of property and a joint venture type of model. All really great investments, just different type of investments for different folks. Different strokes for different folks, of course. But we will go through all that. And of course, we'll give you a really good feel for what's happening throughout all of the U.S. so you understand why we went to Phoenix, because that's a really great point, especially us being from Toronto. It would be really great for people to understand why is it that we went there. We could have gone anywhere in the U.S., right? And of course, you'll be able to see some of the properties that we're buying at not just below what they were going for in 2006, 2005, which were inflated prices, but really what it means to be below construction cost, which is so important. And the last point here that you've made, which is absolutely so important, is really learning what you need to know as a Canadian buying in the U.S. It's completely different than buying in Canada, and many people, unfortunately, are learning things from people who have great intentions, but really do not understand the whole cross-border requirements for Canadians who want to buy in the U.S. And of course, we're going to be talking to everybody about how to keep more money in your pocket, because that is important to us. It's important to our investors. Everybody wants to make sure that their hard-earned money is working for them.
Mm-hmm. Fantastic. So in essence, here's the step-by-step process. And when I look at this, these are notes I got from Daryl. It's the exact same thing that we would want to be doing and looking at if we were buying a property anywhere. And, number one, understanding, what are your plans as an investor? What's the ownership type? And understanding that you have to have the accounting and tax reporting. And I always like to say, I think a lot of people know what they know, but there are things that we don't know that we don't know, if you know what I mean.
Right.
So because we have the internet, we have Google, we have a ton of data out there, but we don't have the experience in some cases to really analyze that and make the right decisions. So we'll give you the experience and basically give you the blueprint that other investors before you have learned along the way, and you'll benefit by all their mistakes. We'll show you how to set up the accounting and the banking, as well as, like I said, introducing you to all the local property managers and the power team. And at the end of the day, what we're looking for is turnkey, renovated, rented, managed properties below market value. And I think that's music to the ears of Canadians, correct?
Absolutely.
Absolutely. Most people will recognize this as a once-in-a-lifetime opportunity.
Yes.
We haven't seen this type of sale on U.S. real estate since the Great Depression, and I wasn't around then.
Well, when we look back at the Toronto market, I think if you ask somebody, hey, if you were going to look back the last 30 years, what is the ideal time? And I think almost everybody, when I show them the chart of growth from, let's say, 1970 to present, they say, you know what, right after the market crash in the GTA in 1989, 1990, if I bought at the trough there, I wish I would have bought 10 houses then.
Absolutely.
When at that time, the average house in Toronto was $100,000. So I think people will look back at the year 2012 and say, you know what, man, I wish I would have bought a couple of houses in Phoenix at $100,000. Remember when they were only $100,000? We're going to look back one day, and everybody guaranteed 10 years from now is going to say one of two things: either I wish I did, or I'm glad I did. And here's sort of the summary. We're going to wrap up shortly. Number one, we're going to help you figure out how to develop a written plan, answer all your questions. You'll get access to our power team and the VIP pricing in terms of where do we get these? Where are the bargains? Where are the deals? And you'll be able to pick from a selection of tenanted cash flowing properties and just get started building a streamlined real estate investment system, because I think I'm like most people. I don't want any more hassles in my life. I want a predictable, simple, hassle-free investment, and I want my life to be exciting, not the other way around. And so I want to thank you guys for being on the call today, and I want to thank all of our listeners for being on the call and being on the webinar today. We hope this was informative. And really the next step is for you. Give us a call, send us an email, whatever you got to do. Send smoke signals if you have to. But either get in touch with us so we can set you up to join us on the tour coming up in just a few weeks, or at least have a quick call over the phone so we can help you figure out what your plan should be before you get down to the U.S., before you buy something and do it the wrong way. Again, thanks everyone for listening. Call us, email us, get a hold of us. We'll get you the information, and we can all start creating wealth together. This is Simon Giannini, host of the Real Estate Talk Show, giving you the inside scoop on all things real estate. Thanks everybody for being on the call. Take care, guys.
Thank you.
Thank you.